So Nigerian GDP is set to grow 5.5% in the coming year. Is that good news for the Nigerian banks?
Well, it ought to be. 5.5% GDP growth is nothing to be sniffed at, especially when you look at it in a global context. It sounds quite good. But if you look at it in a Nigerian context, it's not great at all. Nigeria's economy has been growing at about 7% over the previous couple of years. And earlier this year, the forecast for 2015 was cut from 6.4% to 5.5%. So certainly the rate of growth is slowing. And that's really all down to the oil price. Nigeria is a very oil-dependent economy, so as the oil price falls, so does Nigerian GDP. Obviously, that's awful news for the banks, which are a central part of the Nigerian economy. And bank share prices are down about 2/5 this year as the markets react to the slower GDP growth forecasts and the falling oil price.
So how is this falling oil price going to directly impact the banks?
Well, in a number of ways. Firstly, because Nigeria is so very oil dependent, it affects the economy overall. About 3/4 of government finances are financed by the oil price. So less oil income perhaps suggests less government spending, and that's not such great news for the banks. More directly, these banks lend a lot of money to the oil and gas sector. Some banks more than others. Some banks have about 30% of their loan book or more directed to the oil and gas sector. So any slowdown there is not good. And they invested more through privatizations over the past year or so. Finally, there's the Nigerian currency, the Naira. That's been falling in value and also not great for the banks, some of which have raised money, have raised bonds overseas in overseas currencies. So any devaluation of the Naira hits them as well. So pretty poor news all around for the banks.
Yeah, it sounds like quite dire situation overall. So have these sort of dire consequences been built into the bank share prices?
Well, share prices have fallen heavily this year. They're now trading about 0.6 times book value. That's not very much at all. It's a discount even to what banks in stagnant Europe trade at. They're more or less kind of 0.91 times book value. So quite cheap, the shares in Nigerian banks, with good reason because of the oil price. That said, the non-oil economy is doing quite nicely in Nigeria. Some areas of that are growing at sort of 8% a year. Agriculture is doing very nicely. Information technology is growing quite nicely. Even the consumer goods sector, there's decent sort of prospects there. So for banks that have relatively little exposure to oil, then perhaps it looks fairly cheap, but overall this is still a very oil-dependent economy, and that's what will affect bank share prices.
Okay, so it is really a story still all about oil for Nigeria and Nigerian banks.